After translating the financial statement for a foreign subsidiary, we should know how to translate the financial statement for a foreign associate as well. So associate companies are more likely than the subsidiary to be more independent. So that's why usually they may use their own functional currency as their local currency or their local currencies as their functional currency. If this is the case, translation from the functional currency into presentation currency is actually the usual case for the foreign associate. If this is a translation from the functional currencies to the presentation currency, we should use Coulson-Wee method. So we follow the same equity method for foreign associate. So say for example, if we open a T account, if this is an investment associate account, initially we will record the investment in associate at cost. Therefore, we debit investment associate and we credit away cash or any consideration that we pay. And then later, when we share the associate's profit, we will debit investment associate and credit share of associate's profit. If there has been any impairment loss, we may credit investment in associate and we debit share of associate's profit. If we share the associate's dividend, we will credit investment in associate and we debit away the dividend income that we have recorded in our own financial statements. This is the usual case, but don't forget, if there has been any translation from the functional currencies into the presentation currency, there may be a translation reserve. And therefore, remember, we share not only profit of an associate, we share all reserve of the associate as well, including translation reserve. Therefore, if this is a favorable translation reserve, we may debit investment in associate and we credit share of associates translation reserve. Let's see an example. In this example, the investors who has got a functional currencies in dollar acquire a 25% interest in a foreign company, 25% significant influence, and therefore this is an associate. How much we pay? We pay FC 100,000. On that day, incidentally, $1 equals to 1 FC, and therefore this is also $100,000 because it is 1-to-1. The associate's functional currency is FC. Therefore, when we translate from FC to dollar so that we can consolidate, we are translating from the functional currency to presentation currency. If we want to consolidate in dollar, therefore, Coulson-Wee method apply. On the day of acquisitions, this associate has got a net assets of FC 300,000. The book value is close to fair value, therefore there's no fair adjustments to make it simpler. In its own financial statements, they use cost methods to account for this investment associate. There has been an implicit goodwill impairment, 5,000 FC in 2002. This is the statement of comprehensive income for the year 2002, and we have got the exchange rate, etc. Therefore, initially, we have recorded this investment at cost. If we want to consolidate this in dollar, this is $100,000. Now, we start to share the profit of this associate. The question says that this is the profit information in FC. We want to consolidate this in dollar, and therefore we have to translate this from FC into dollar. As we have said before, translation from FC being the functional currency of this foreign operation. Right? Functional currencies of this foreign operation is FC. Therefore, translation from FC to dollar is a translation from functional currency into presentation currency. Coulson-Wee method apply. If this is Coulson-Wee method, usually for income and expense, we simply use FH rate. For these questions, FH rate is 1.2. 1.2, so 80,000 translated using 1.2, 96,000. Taxation, FH rate. Profit after tax, actually all income expenses, we translate at FH rate 1.2. Therefore, in terms of dollar, this is 67,200. Of course, we cannot share all. We share only 25% as an associate. So 25% means 16,800. Therefore, we debit investment in associate $16,800 and we credit share of associate's profit. This is to share the profit, after which we share the dividend. Dividend is a movement in equity, so we should use the actual exchange rate. The question says that the dividend is paid on the last day, and therefore on that day, the actual exchange rate is 1.25. So 20,000 translated at the actual exchange rate being equity movement, 25,000. We receive 25%. Therefore, in our own record, we must have recorded a dividend income of 6,250. Because we share the profit already, therefore dividend should not be regarded as an additional source of profit. We should eliminate, we should debit away this dividend income. Therefore, we debit dividend income 6,250 and we credit investment in associate. This is what we have learned before. We share the profit and we share the dividend and we eliminate. Now we start to translate for the net asset and the goodwill, right? There should be three components: book value of net assets, fair adjustments, and the goodwill. We don't have fair adjustment in the question because the question say that no fair adjustment. So we first translate the book value of the net asset. At the day of acquisition, the net assets was 300,000 FC. On that day, exchange rate was 1 to 1. Therefore, we translated using 1 to 1, $300,000. At the end of the year, the net assets should increase because we do have profit. Profit increase net asset, dividend reduce net asset. So the net asset should have been increased by 36,000. So profit 56, dividend 20, closing net assets should be 336,000 FC. For profit, we have translated using the average rate, all income and expense under closing rate method, average rate. Dividend, actual exchange rate at the last day, 1.25. So if nothing happened, our net assets in terms of dollars should be 342,200. However, this should be kept in FC being the functional currency, and therefore it should be $336,000 under closing rate method. Asset, net asset should be translated using the closing rate. Closing rate is 1.25, so it must be 420. So we have to write up the book value of the net asset, 77,800. We cannot share all, we share only 25%. Therefore, we share 25% of 77,800, this being 19,450. This is the book value of the net asset. On top of which, there will be fair adjustments and the goodwill. We don't have fair adjustments, so that's why we translate for the goodwill. Goodwill. How much is the goodwill? How much we pay? We pay 100,000 FC. How much we get? We get 25% of 300,000. 25% of 300,000 is 75,000. Therefore, we pay 100, we get 75, and therefore the goodwill component is $25,000. On the day of acquisition, exchange rate is 1 to 1, so this means $25,000. The question says that there has been a goodwill impairment, 5,000, so goodwill has been impaired by 5,000 FC, so the closing should be 20,000 FC. Impairment. Impairment, unless we know exactly which day it has been impaired, otherwise it may gradually impair, so that's why we simply use the average rate. Average rate is 1.2, so average rate for the impairment, so that's why it has been translated to $6,000. If nothing happened, the closing goodwill should be 19,000. However, goodwill is an asset. All assets should be translated using the closing rate. closing rate is 1.25, so it must be 25,000. In other words, we have to write up the goodwill. Goodwill is the goodwill for the investment associate, therefore no need to share 25%. This is already our goodwill component for our investment. So 6,000 altogether. So altogether 6,000. So actually there should be a translation reserve of 25,450 relating to this translation. Therefore, we credit share of associates translation reserve and debit investment associate, right? Because the net asset increased, so therefore we debit investment associate 25,450. But don't forget, there has been an impairment loss, right? This impairment loss we haven't recorded yet. Impairment loss means we have to credit investment associate and debit share of associate's profit because this is an impairment. So investment associate should go down. Altogether, if we add them together, the balance should be 130,000. Right? If the question did not ask anything otherwise, in your consolidated financial statements, the investment associate should be recorded as $130,000. Sometimes the question may ask for a reconciliation, or we call it an analytical check. We should be able to analyze it into its three components, being the book value of the net asset, fair value adjustments, and the goodwill components. Book value of net asset first. How much is the book value of the net asset? We know that book value of the net asset should be 336,000 FC translated at closing rate. This should be 420,000, but this is the total. We can share only 25%. So 336,000 translated at the closing rate, we share 25%. This means $105,000. There's no fair value adjustments. And then we got the goodwill component. How much is the goodwill? Goodwill is 20,000 FC translated using 1.25, wholly for this investment in associate. So therefore this is 25,000. If we add them together, book value of the net asset, fair value adjustments, and the goodwill component, exactly we can match with the balance of the investment in associate.